I'm Brendan Coffey. I'm the finance reporter with Sportico, and have a great session for you here now with about private equity in sports, and have with you the managing partners of Arctos Partners, who just finished raising $3 billion for their sports investment fund. Ian Charles and Doc O'Connor, thanks for joining us today.
Thanks for having us.
Let's start off with the obvious, question here. Private equity's been interested in different sectors, for ages, but it's sort of late to the sports game. What's the case for private equity investing in sports, or why have we come to it now, and what's the appeal?
Well, I think the first answer to that question, Brendan, is that sports matter. I've spent my whole career in sports and entertainment. And that's one of the critical things about sports assets and the sports ecosystem. They matter culturally, they matter politically, they matter literally to billions of people. So they're an important part of life. As our partner Vivek Ranadive likes to say, in sports, the customer is called a fan, short for fanatic. It connotes a different level of customer engagement with the product itself. So then when you make that available as an investment class to institutional capital, you add to it the fact that these assets are scarce. There's only 150 of them or so in the so-called Big Five in the US. You add to the fact that most US sports franchises, I think 96%, are profitable, absent COVID, greater than 20% margins in those cases. There's strong, predictable, recurring revenue streams in the asset class. There's low to negative correlation as an asset class to other asset classes. And lastly, they've outperformed virtually every other asset class, particularly equities in the last 20 years. So, the average franchise in the Big Five in the US today is worth $1.9 billion. 10 years ago, that average was 500 million. So there's tremendous value accretion as an asset class that is only just recently been opened up to institutional investors.
Yeah, what's happened that it's opened up to institutions? Because there has been team value growth has been going on for a while now. What's changed? Institutions like you guys can come in.
Well, what's changed is that many of the leagues, in their own way, on their own timeline, have gotten comfortable that in very certain circumstances, subject to very specific guidelines and rules, they will allow institutional capital through very unique kinds of funds to partner with their control owners and be limited partners in their clubs. Major League Baseball was the first league to proactively change its rules in the first quarter of 2019. Shortly thereafter, the NBA also made an institutional rule change. And each of the other leagues has kind of gone down this path, again, on their own timeline to meet their own needs and objectives. And so this is a very recent phenomenon where institutional capital through funds has been able to partner with owners and leagues in North America.
Yeah, and now sort of just to backtrack maybe for folks who aren't familiar with Arctos, you're looking to invest in minority stakes, limited partner stakes in pro sports teams. What is it about limited partnerships that taking minority stakes that has appeal for you guys?
Well, just to be very clear, that's the only thing that the leagues allow funds to invest in. The leagues do not allow you to be a control governor or a control owner. So if you want to invest in the Big Five North American leagues, you have to be prepared to do it as a limited partner with very limited governance rights. You have to have a very long horizon. And that's not an easy combination of things to find in a private equity fund.
Okay.
I think the other thing to say about limited partnerships, Brendan, is that By being an LP and given the league rules, we're allowed to invest in multiple franchises and multiple leagues. And that diversification is important to institutional investors. It provides a much greater return with lower risk.
Okay. Okay. And maybe I'm oversimplifying it too, but on the minority owner side, with that great increase in team valuations, the limited partner stakes have gotten more expensive too. I sort of really ballpark there about 2,000 billionaires in the world, and that means, right, to get into those 150 teams, you probably need 1 out of every 10 billionaire buying into a team, which ultimately is sort of a small universe. Is that part of what's at play here? Is just that simple need for a new set of buyers?
I think what you're hitting on is that in any asset class, as the asset class grows, there needs to be a certain level of liquidity to support continued valuation growth. That's happened in high yield, that's happened in bank debt, that's happened in private equity, in real estate, and it's happening in sports franchises. Right? As you bring more liquidity over time supports increasing valuations. But this isn't just about liquidity. I think that's really important. Only about a third of the deals we've done are around liquidity solutions. Any business that has a large potential growth opportunity is constrained by the capital that it takes to achieve that potential growth. And particularly North American sports leagues, they have debt limits, and they haven't been accessible to institutional capital. So largely, the potential growth has been met by internally financed cash flow or capital calls or new project finance from the current ownership group. There is so much potential growth in this ecosystem today that bringing capital in, growth capital, can help these assets achieve their potential growth, which can sometimes be constrained by internally financed growth.
Yeah, interesting. What do the leagues and the teams want to know from you guys, though, right? Because it's one thing to come to them with money, yeah, right? It's another for them to have a comfort level with bringing private equity into the fold. What do you find generally they want to know from you guys?
Well, to Ian's point, first and foremost, bringing liquidity to the landscape, but in more depth, they're looking for patient, passive, long-term capital. They're looking for their franchise valuations to be supported and enhanced over the long term. They're looking for investors that don't upset or disrupt the competitive balance of any given league. And they're looking for investors to be good partners with both the leagues and the individual franchises. What good partnership means is bespoke and specific to a given owner and a given franchise. Some want passive partnerships, purely passive partnerships. Others are looking for real value add partnerships on the business side. That makes our blend of skill sets under our roof so powerful with our partners. We bring real operational expertise, both directly under our roof and through the array of advisors that we have brought in to the fold and are a value add to our partnerships. We also bring in real investment expertise, so we can be any kind of partner an owner would want.
Okay. On the institutional side, on the Arctos client side, right? The people who invest with you and through you, what do they want to know from you guys? How does a sports PE fund fit into an institution, a pension fund or an endowment or however you want to define it? How does it fit into how do they see it fitting into their strategy?
Listen, we've had an incredible opportunity to partner with some of the best owners and leagues in the world, but also some of the best institutional investors in the world. And they all have their own unique goals and objectives, but consistent themes are significant market opportunity, a chance to back a first mover that has entrepreneurial experience. And both Doc and I have built businesses in private markets and in the sports ecosystem. Our team has a tremendous track record working at leagues, at clubs, but also running, very high profile illiquid investment strategies. And our institutional investment partners see that combination of skills, a very large market opportunity, a first mover advantage. And we've partnered with them in a wide spectrum of parts of their portfolio, the low risk buckets, the best ideas bucket, the growth capital, infrastructure, private equity. We've got a wide range of investor types and the buckets and teams within those organizations that have backed us.
And almost by definition, with what you're doing, it has to be a bit of a longer term play for them, right? Because unlike other areas of PE, you don't have a sort of two traditional exits that often come up, like a company going public or a company being acquired. That's probably not going to happen in the sports phase, right? So it's people with long term views here too, right?
Yeah, listen, institutional capital tends to have a much longer perspective than individuals, right? If you're a pension fund or an insurance company, you're managing the liability streams that are 20, 30, 40 years, right? It's very hard to find assets that you actually know will be around for 20, 30, 40 years that have a history of strong, uncorrelated compounding potential. These assets are actually a perfect hedge for long-term liabilities that institutional investors are trying to manage against. They just haven't been able to invest in them historically.
Interesting. And I know you guys had a great fundraise, right? You just closed $3 billion fund. So you raised about $2 billion this year alone for that. But I assume, right, there's some folks you spoke with who decided not to invest. I'm just curious. So what are some of the hesitations you see out there for some institutions about sports?
So you don't spend a whole lot of time dissecting the no's. You just got to keep moving on to the next meeting. But look, I think generally first-time strategies have a really hard time attracting capital because there's so much unknown, so much uncertainty. First-time teams have a really hard time attracting institutional capital. And so we've overcome a lot of those normal hesitancies because we do have a team that has a tremendous track record in the sector that we're focused on, but also a top decile track record managing institutional capital and delivering excess return in a wide range of passive illiquid strategies. That combination is a very, very powerful one. And you blend that with an incredible team, an entrepreneurial culture, and massive investments in data and information. And that creates a really unique opportunity. Why people said no, I don't know. Maybe they'll say yes next time. We'll figure it out. There's a lot of opportunity out there, right? There's a lot of great managers. There's a lot of great strategies. And there's only so much capital to go around, right? And so sometimes the no just means there was just something a little bit more interesting or a little bit better, right? It's not an indictment on you.
Yeah. I mean, it's also still really the opportunities for you guys, or private equity in general, are still opening up, right? So the big question is, right, is the NFL? When is the NFL, or is the NFL going to open up its league to doing what you've done, right? We know you're in a few organizations that Sportico reported, right? You have a bit of the Red Sox and Liverpool FC through Fenway Sports Group, and a couple of NBA teams as well. Sort of what's next, and specifically the NFL. Do you have any thoughts on if and when they might open up?
Listen, every league works to their own timeline, to their own goals and objectives, and creates a set of solutions and options for its ownership group that it thinks are best, right? And so we're excited about the leagues that have given us the opportunity to partner. We're excited about what might unfold over the coming years. And we're just trying to make the best of the opportunity and do a great job for the investors and the owners that have partnered with us.
Okay. All right. Fair enough. Fair enough. And I don't want to let it pass, but in addition to your sports private equity fund, you also have a SPAC. And Doc, maybe you can talk to me just a bit. Obviously the world's your oyster with a SPAC, right? By definition, a SPAC can look to invest in anything that shareholders approve. But I know it's some sports focus there. And maybe speaking generally, what are sort of opportunities you see in sort of sports adjacent fields? Maybe not necessarily for your SPAC, but what intrigues you in sort of that those in that area right now?
Well, it's an incredibly dynamic landscape, and we have a deliberately broad mandate for our SPAC. So and by the way, we're specifically not focused on franchises with our SPAC. We cover the entire sports ecosystem, from sports tech to sports media to health and wellness to performance tech and wearables to data and analytics to sports gambling related enterprises. It's a very broad ecosystem, and we have a very broad mandate to mirror that ecosystem. It's deliberately a wide swath.
All right, fair enough. Well, there's one thing that I know we're sort of moving along here on our time, but right. So this week we have a team in the World Series, the Atlanta Braves, that are owned outright by a corporation. It's not even family controlled. Liberty Media owns it, and then sort of the Braves ended up being a sort of tag-along asset years ago when Liberty bought Turner Broadcasting. So obviously a sign that a corporate-owned team can be successful, right, with the Braves being in the World Series. As you look ahead and see the private equity and the investment fund participation evolving, do you think one day we could see a situation where a pro sports team's sort of majority owned by a fund, and if so, can that be successful?
Well, Brendan, I'd also say that there are other public companies that are sports enterprises. You've got MSG, which I ran for several years, and you have Manchester United, and you have a number of European football teams that have associations and quasi-public types of constructs. So you could see that evolving over time. But right now, rules don't allow for that construct. For that to happen, it would require a major overhaul of ownership rules in the US domestic leagues. And frankly, we don't see that as a high probability in the next 3 to 5 years.
Okay. Yeah. Obviously, the Man U and MSG are ultimately controlled by one family, right? The Glazers and the Dolans, respectively. I thought it was interesting that you really see a situation where a team is part of a corporate entity that doesn't sort of have a real personal connection, if you will, to the franchise.
Look,
it's a very unique situation, though. That it's a grandfathered situation. It's not a data point from which to plot a trend on where the leagues are going.
Okay.
Yeah.
All right.
I would just also say that sports franchises, given many of them feel like local public trusts, they need a face, and so corporate ownership is rather faceless by definition. So a little difficult to imagine leagues embracing that concept.
Okay. Yeah. Well, what other evolution do we see? Right. It feels to me like we're in the early stages of this, of funds like Arctos and private equity in general, really being able to unlock the value that sits in sports franchises. How do you guys see things developing from here?
Listen, I've spent my entire career in private equity. Don't give the private equity industry too much credit. The private equity industry provides capital to amazing entrepreneurs, managers, business builders, and teams. They do the lion's share of the work. The private equity industry takes a lot of that credit, So what's really exciting about this landscape's evolution and innovation, it's not going to come from private equity funds. It's not going to come from the quant financial engineering. It's going to come from the leagues, their teams, their leaders, and the clubs innovating in new technology platforms, the digitization of ticketing, right? The direct to consumer migration, unlocking international markets, building international businesses, building league level businesses. And all of that innovation is going to require capital to achieve its full potential. That's what's exciting is the very small role funds can play in financing that innovation and helping around the edges.
Yeah. That's interesting. But you did mention international markets, and I think we need to acknowledge it's not all it's not all kumbaya here, right? Especially, I think there's a lot of comfort in North America among the North American leagues with with corporate money to various extents, and I think all the leagues, the big five leagues, and have to some extent instituted salary caps and sort of revenue and cost certainties that doesn't really necessarily exist outside of North America. And you have seen some pushback, some sort of fear of American institutional money specifically going into foreign, into non-US leagues, right, in Europe and the Antipodes. What are your thoughts? What are your thoughts about the international opportunities, Ian or Doc?
Well, I think you're starting to see signs of change in international marketplaces. I think you're seeing, particularly in international football, where COVID has put a great deal of stress on the balance sheets of many of these clubs. And you're also seeing a greater separation between the haves and have-nots. I think that the challenge is that most international leagues don't have the centralization and the regulation found in North American leagues. Most have little to no player salary restrictions or financial spending constraints. They do have promotion and relegation, which creates a certain level of risk. They don't have a whole lot of strong debt limitations in many circumstances. But, when massive and major important clubs like FC Barcelona fall into the kind of financial difficulties that they have recently, you're starting to see signs and movement towards greater financial regulation and stipulations such that those kinds of administrations and other things don't occur.
Okay. All right, great. Well, yeah, I see we're on top of our time here, and I could geek out and talk about this for a lot longer. But Ian Charles, Doc O'Connor, Arctos Partners. One last thing, you just closed your first sports fund. When are you closing the second one? When does that start?
We're working hard to be a great partner for all the clubs and leagues that want to be our partner. And when we've invested the capital that we've been entrusted to deploy, then we'll go back to our institutional partners and talk about fund two.
All right. Well, thank you both for taking the time out to speak with us. I appreciate it.
Thanks for the opportunity.
Thanks, Brendan.
Appreciate it.
Take care, guys.